Remember when Trump slapped tariffs on everything? Yeah, that's happening again. He says it's to protect American jobs. Critics say it's a trade war waiting to happen. Either way, get ready for some economic turbulence. Buckle up, America. The year is 2025 and we've seen this movie before. Trump, a man who seems to love a good tariff more than he loves a well-done steak, is at it again. His latest targets steel, aluminum and, well, pretty much anyone who dares to sell things to America cheaper than we sell them ourselves. First up, steel and aluminum. Trump slapped a 25% tariff on imported steel and a 10% tariff on aluminum. He says it's to protect American jobs, but critics say it'll just raise prices for consumers and hurt American businesses that rely on imported metals. Remember 2018? Trump tried this already. It caused a whole trade war thing. He eventually backed down, making deals with some countries, but now he's back at it. It's like he learned nothing from the first time. Trump's also threatening something called reciprocal tariffs. Basically, if another country puts a tariff on something we sell them, he's gonna slap a tariff on something they sell us. Sounds fair, right? Well, trade wars rarely are. Imagine a playground. Two kids, each with a pile of mud. One kid throws mud at the other, then the other throws mud back. Pretty soon everyone's covered in mud, and nobody's having fun. That's kind of what a trade war is like. Here's another fun term. De minimis. It's a rule that basically says you don't have to pay tariffs on imported goods if they're worth less than a certain amount. Right now, that amount is $800. But Trump's thinking about lowering it, way lower. Think about all the stuff you buy online from other countries. A lot of it probably costs less than $800. Now imagine if that stuff suddenly became more expensive because of tariffs. That's what could happen if Trump changes the de minimis rule. Section 5. The price we pay, consumer goods. Feel the heat. So, what does all this mean for you, the average American consumer? In a word, higher prices. Those tariffs on steel and aluminum, they're gonna make cars, appliances, and beer more expensive. And those reciprocal tariffs, they could affect the price of just about anything. Remember when you could buy a cheap t-shirt online for like $5? Those days might be over. And that new phone you've been eyeing? Yeah, it's probably gonna cost you. Thanks, tariffs. Section 6. Business blues. American companies brace for impact. It's not just consumers who are worried. American businesses are freaking out too. Those tariffs on imported materials, they're gonna eat into profits. And those reciprocal tariffs, they could make it harder for American companies to sell their goods overseas. Imagine you're a small business owner. You make awesome widgets. You sell your widgets all over the world. But now, because of tariffs, your widgets cost more to make and it's harder to sell them in other countries. That's not good for business. Section 7. Global backlash, trade partners push back. So how are other countries reacting to all this? Not well. Canada, Mexico, the EU, they're all pretty pissed. They're talking about retaliatory tariffs of their own. Remember that mud-throwing analogy? Yeah, things are about to get messy. The thing about trade wars is, nobody wins. Everyone loses. When countries start slapping tariffs on each other's goods, it hurts everyone's economy. Prices go up, jobs are lost, and everybody's worse off. Section 8. A house of cards, the fragile state of global trade. The global economy is a delicate thing. It's built on trust, cooperation, and the free flow of goods and services. When one country starts messing with that balance, it can have ripple effects throughout the entire system. Trump's tariffs are like pulling a Jenga block out of the global economy. It might seem like a small thing at first, but if enough blocks get pulled out, the whole thing could come crashing down. Section 9. The bottom line, Trump's gamble, America's risk. So, are Trump's tariffs a good idea? Most experts say no. They argue that the costs far outweigh the benefits. They say that tariffs will lead to higher prices, job losses, and a slowdown in economic growth. Trump's basically playing a high-stakes game of poker with the global economy. He's betting that he can bully other countries into giving him what he wants. But if he's wrong, it's American businesses and consumers who will pay the price. The markets were rocked this week when President Trump dropped a bombshell announcement. A new wave of reciprocal tariffs aimed at countries that impose high import taxes on American goods. The move, announced on February 7th, sent shockwaves through Wall Street and beyond. Trump's message was clear: He intends to fight fire with fire to protect American businesses and workers. Details remain murky, but one thing is certain: the tariff turmoil is far from over. Trump's latest move builds on a series of prior tariff announcements. On February 4th, a 10% tariff on Chinese goods went into effect. Looming on the horizon are even steeper 25% tariffs on Canadian and Mexican goods, though their implementation has been pushed back to March 1st. The new reciprocal tariffs add another layer of complexity to an already volatile trade landscape. Trump argues that these tariffs are essential to rebalance global trade and protect American interests. He contends that other countries have been taking advantage of the United States for too long, slapping hefty taxes on American exports while enjoying relatively open access to the American market. By imposing tariffs of our own, Trump aims to force trading partners to the negotiating table and secure more favorable terms for American businesses. The administration maintains that these tariffs will ultimately boost the American economy by protecting domestic industries from unfair competition and encouraging companies to bring manufacturing jobs back to the U.S. They point to the need for reciprocal tariffs as a means of leveling the playing field and ensuring that American businesses are not disadvantaged in the global marketplace. Investors were quick to react to Trump's tariff pronouncements, sending the stock market on a downward spiral. On February 7th, the Dow Jones Industrial Average plummeted by 400 points, a drop of nearly 1%. The S&P 500 and Nasdaq also took a hit, falling by 0.9% and 1.4% respectively. This sell-off followed a week of already shaky trading as investors grappled with the potential fallout from Trump's trade policies. The housing market, already facing headwinds from rising interest rates, was particularly hard hit. Shares of major home builders like D.R. Horton, Lennar and Pulte Group tumbled more than 3% on Monday, as investors fretted over the potential impact of tariffs on building material costs. Lumber, steel and aluminum are all subject to Trump's tariffs, and experts warned that higher prices for these essential materials could dampen new home construction and drive up prices for buyers. While the Trump administration argues that tariffs are necessary to protect American jobs and businesses, critics counter that they amount to a hidden tax on consumers. The Peterson Institute for International Economics estimates that the tariffs could cost the average American household more than $1,200 per year, the largest tax increase since 1993. Even with the extension of the 2017 tax cuts, the bottom 60% of earners would be worse off under this scenario. The tariffs are already having a tangible impact on consumer goods. From washing machines to solar panels, the prices of imported products have been creeping up, putting a strain on household budgets. The tariffs are also disrupting supply chains, forcing businesses to scramble for alternative suppliers and navigate a thicket of new regulations. This uncertainty is stifling investment and hampering economic growth. Section 5. Housing hammered. The home building sector, already grappling with rising labor and land costs, is particularly vulnerable to the ripple effects of tariffs. The National Association of Home Builders, or NAHB, has warned that tariffs will exacerbate the existing shortage of affordable housing by driving up the cost of materials and discouraging new construction. With lumber prices already soaring due to tariffs on Canadian softwood lumber, builders are feeling the squeeze. Lennar Corporation, one of the nation's largest home builders, estimates that tariffs could add anywhere from $5,000 to $7,000 to the price tag of a new home. This added expense could price many potential buyers out of the market, further exacerbating the housing affordability crisis gripping many parts of the country. The NAHB has called on the administration to reconsider its tariff policies, arguing that they are harming the very workers they are intended to protect. Section 6. A global trade quake? The specter of a global trade war looms large as other countries threaten retaliatory tariffs on American goods. China has already responded with tariffs on soybeans, pork, and other agricultural products, dealing a blow to American farmers who rely heavily on exports to the Chinese market. Canada and Mexico have also vowed to retaliate, potentially targeting key American exports like automobiles and agricultural products. A tit-for-tat escalation of tariffs could have devastating consequences for the global economy. The International Monetary Fund has warned that a full-blown trade war could shave as much as 0.5% off global GDP growth. Consumers worldwide would feel the pinch in the form of higher prices for a wide range of goods, while businesses would face disrupted supply chains and reduced demand for their products. Section 7. Economists Cry Foul. Many economists argue that Trump's view of trade deficits as inherently bad is a fundamental misrepresentation of how the global economy works. They point out that trade deficits simply reflect the fact that the United States consumes more than it produces, and that these deficits are offset by capital inflows from foreign investors who purchase American assets like stocks, bonds, and real estate. Rather than focusing on shrinking the trade deficit, economists argue that the administration should focus on policies that promote sustainable economic growth, such as investing in education, infrastructure, and research and development. They warn that Trump's protectionist policies risk undermining decades of progress toward a more open and integrated global economy. Section 8. Tariff Timeline, a rollercoaster ride. The path to the current tariff turmoil has been anything but smooth. The initial announcement of tariffs in the weekend before February 3rd sent shockwaves through the markets and sparked fears of a trade war. The implementation of a 10% tariff on Chinese goods on February 4th further heightened anxieties. The surprise announcement of reciprocal tariffs on February 7th added another layer of complexity and uncertainty to an already volatile situation. Adding to the chaos, the Trump administration temporarily restored a de minimis exemption for packages valued under $800 after the United States Postal Service briefly halted, then resumed deliveries from China and Hong Kong. This exemption, which exempts low-value shipments from tariffs, was reinstated through executive action while the administration works to implement a system for collecting tariffs on these goods. Section 9. The Art of the Deal or Road to Ruin. Trump, who fancies himself a master negotiator, seems to believe that he can bully other countries into submission with his aggressive tariff tactics. However, many experts warn that he is playing a dangerous game of chicken with the global economy. The outcome of this high-stakes gamble remains uncertain, but one thing is clear: the stakes are high for American businesses, consumers, and the global economy as a whole. Will Trump's tariffs achieve their intended goal of bringing back manufacturing jobs and reducing the trade deficit? Or will they backfire, sparking a global trade war, driving up prices for consumers and stifling economic growth? Only time will tell what the ultimate legacy of Trump's tariff turmoil will be.